Hello everyone, I am Dinesh. Today I am going to discuss about the price break signal money management. So first of all, we start with what is money management and the details of money management, and why we should follow the money management, and what is Martingale, and also is it recommended, safe or unsafe, and what is the recommended money management we follow in PBS. So for any successful trader, if you speak with any of the professionals, and not with the people who are just starting now, but with the people who are in the industry from the past 3 to 4 years, and more than 3 to 4 years, sometimes more than 10 years, they always say that they have strategy, and besides the strategy, they also have money management. So what is money management? Before going to the details, let's talk about a simple trade that we take in binary options. Since we are to binary options, so let's do it like this. For example, we have a fund of $1,000 that we can invest, and we are happy to trade with. And then we don't know, and if we don't follow any kind of a strict policy or a guidance or a guidelines of managing the funds, then we might end up losing the complete money and blow our account. And it is quite natural and quite common to blow the account for a trader, and that is very good in the initial stages. But if we don't stick to the money management, and if we don't have a proper discipline in what we are doing and what we are trying to achieve, then we are sure that we will fail. So money management, to put shortly, is a tool or a methodology or a method adopted by this trader to strictly follow in achieving his objectives or goal in terms of growing his account or her account. So in that process, we try to manage the funds. Let's go into details now. We took a pair Euro USD, and we assumed that in the next 5 minutes the trade is we trade in one direction. Let's say it's going to go input direction. So unfortunately we lost the trade and the price went up. So in that situation, let's say we traded that with $10. So to recover the $10, we again go in the other direction, say okay, now the trend has changed, so let me stick with that. And the strategy says okay, go with in the same direction if the trend changes. So then we invest $20 to recover the $10 and end up with some profit, with the percentage payout of the broker to be 70%. Then $10 and then $20 makes sense, so we put $20, and unfortunately that trade is also lost. So like that, if we try to recover that $1 or $10 in the first investment, that is called the technique of doubling the funds or growing the fund size to recover the lost funds, is called Martingale. So that is basically the technique used by the people who do gambling. But when we follow binary options or forex industry, gambling, if we start doing this in the mode or in the style of gambling, then we are 100% sure I can guarantee you that if we go by gambling, we might make money initially and we will definitely lose the money. It is guaranteed. So to be a professional trader and to make money in the long term, the ideal way is to follow a strategy which we already have, price break signal, and which is the most profitable strategy that I have come through in the past 2 to 3 years. And the best is to follow money management. So in that process, we are trying to go through some of the important aspects of money management. So that is called Martingale. So Martingale is the process of increasing the fund size to recover the first investment. So that is what Martingale is. So is it recommended, safe or unsafe? So let's do some basic mathematics. So our first investment, let's say $10. So suppose we lost the trade, and the second investment will be $20. Let's say that is also lost, and the third investment, to recover the 30, we'll put $50. So let's say the broker payout is 70%, and the first one is a loss, second one is also a loss, and now the third one if we say it's a loss, then, and let's say our account size is $1,000, and we are going with let's say 1%, probably 1% of what, $10, 1% of $1,000, and the fourth one is going to be the recovering of $80, so which will be roughly around $110 to $120. So if there is a winner, suppose if it's a win, then we are covered with all the losses and we put the account into profit. But if we lose, then we ended up losing almost $200. So $200 of the funds are lost. So which means that you already reduced your account to one, or by 1/5. Okay, let's say that's not bad. 1/5 is okay, but $1,000 of 1/5, $200 is really bad. So let's put that aside. So why is it safe or why is it unsafe? Let's talk about being safe. Obviously, when we recover this complete $100, the investment that we have been investing in, $10, $20, $50. So at 120, the fourth trade, we recovered all the money and we put the account into profit. So that's nice. So we recovered it and it's safe, happy, no problem. But if we lose, then we lost $200. So to recover the $200, your next will be somewhere about 500 or 300, which is like most of the money is already gone in 5 trades. So your account can go off just in 6 to 7 trades if you go with the $10 investment as a first lot size. So that's the reason they say it's the con of doing Martingale. And the problem is, even though the strategy is very good, and even only if you know that the strategy is happy enough to recover the money, then go with Martingale, or else don't go with Martingale. No professional will say go with Martingale. They might say second level of Martingale, which is like if you lose 10 and if your strategy is 100% sure, or at least 80% of the time it's sure that it will recover in the second trade, then go with the second level of Martingale. Then after that, beyond second, they say don't go with it. Why do they say why the professionals say don't go, or why is it unsafe to go for more than 2? Let's talk about being in the market. For example, we lose a trade which is $10 and we are trying to recover that money using $20. So the objective here is gaining money, no doubt about it. But in order to gain the money, first of all, we need to be in the market. That is the most important point. So if I put $10, let's say my initial investment is $10, and if I win the $10, then I make $17 profit, which is fine, nice enough. And if I lose, then I put $20. So when I put $20 as an investment and I try to recover that $10, and if I lose, then I lost $30, which is like a combination of 10 plus 20, which is 30. And this 30, if you see carefully, this is equivalent to 3 times of your chances of being in the market. Now, by investing $20, you reduce your chances of being in the market to 2 now. So when you invest 50, so you are risking that your chances of being in the market by 7 times, because you wanted to recover the $10. And if you go for 4th level of Martingale, you are reducing the chances of being in the market by 20 chances, almost like near to 20 chances. So imagine you started investing only 10 for each and every trade. But whichever you see, you end up doing 10, 10, and 10, and 10 again, and 10 again, and 10 again. So which means that you are in the market 20 times more or than what it is by using Martingale. If you recover it, then it's well and good. But if you don't recover, then that is the where the problem comes in. So you have to be in the market. The chances of being in the market is most important rather than just recovering the money. So that is why it says not safe. And binary options, applying Martingale is, some say they wanted to apply, but some disagree with it. So you better don't do Martingale when you are initially in the market and are trying to learn the market and how the strategy works. So now let's talk about why do we apply we don't apply Martingale in price signal. So now let's see why we don't apply Martingale in price break signal. The first important point to understand is, as you all know, price break signal works on fractal points and barriers, and also support and resistance, and so many other stuff, swing lines and all. So the very root point to discuss is, we trade basing upon the point that this is the strongest barrier for the price movement at that particular point of time, and the price is going to reverse. But knowing that that is the strongest price point for reversal, and still the price continued to go forward or to go in the same direction, then the chances of it tracing back or reversing is very, very, very minimal. So that is the most important point. We say that don't use Martingale in price break signal strategy. And secondly, the chances of even our test shows that applying 2 levels of Martingale increase the ratio by almost like 10 more percent, like 90% of the trades. At the moment we have 82% win rate, but by using second level of Martingale, we recover almost nearly 90% of the trades. So which is a good ratio, but we don't want to imply that, or we don't want to make an point that using 2 levels of Martingale or 2 levels of lot sizes will definitely going to recover 90% of the times, because the reason is very simple. If we start applying 2 levels of Martingale, then we are losing the chances of 2 more times being in the market. For example, if we lose a trade, then obviously we lost 2 more chances to recover, or 2 more chances of being in the market. So the moot point here is to stay in the market as long as possible, because that is the place where we can trade and recover the money. So we don't want to lose the chances. So that is the basic point, that we don't want to lose the chances of being going away from the market and staying in the market. So that is why it is we don't trade with we don't use Martingale in the price break signal. You strictly say no to use Martingale, but if people wanted to use Martingale, then we say apply the Martingale not in the same setup but in a different setup. So that's some completely different topic, and we can take it up when we see you in price break community group. So besides that, so what is money management? As I said, it is the guidance and a tool used by traders to grow their account, and strictly following that will keep you profitable. The most important point is, what does the money management will have? Money management have many aspects in it. It tells you when to quit the market. It tells you how long you want to stay in the market. It also guides you what is your risk appetite. It also tells you what is the level of consumption of or acceptance of losses by you in a day-to-day trading. So there are many aspects of it, and we are going to discuss in a very nice and clean way, which I'm going to do it in a minute. And what is the recommended money management we follow in PBS? That's exactly what I'm going to show you. So money management and the risk of trading all depends to the individual users. It is subjective to the traders. Some have a risk appetite of let's say 20%, and some only have 1%, and some have 5%. So it all depends, and it's subjective to the people and to the traders. And we recommend certain things, and which I'm going to share you in a minute. So what I wanted to tell you is, try strictly follow money management. The reason is very simple. If we follow money management in a strict way, it is guaranteed that you can be profitable. So you strictly have to follow money management. That is the most important point. Price break signal strategy is very simple and very helpful, and I have seen many people using it and making money with it, and they're very happy using it. It's because it's stress-free system. You don't need to apply a lot of brain in it. Everything is nicely stipulated. Everything is in one place. All the indicators are in one place, in one chart. You don't need to worry about many places, or looking into different places, or looking into different charts. Everything is done by the indicator for you, and all you need to do is to wait for the signal and then trade. That's all. And there are certain rules, 7 golden rules and 3 sub rules, which we can discuss when you join the group. But besides that, so it's very simple system, and try to make use of the system, and try to follow strictly money management. That is more important. So let's talk about price break signal money management. I'm going to show you what we follow. So this is called PBS cool mode on one of the money management. So we are trying to propose two different money managements in PBS. One is cool mode and one is aggressive mode. In this video we are not going to discuss about the aggressive mode because that's limited to the live traders, to the real group of price break signal. But cool mode is one of the modes that can be discussed across everybody, and anybody can use it, and anybody can apply it, and you can download it from our website www.pricebreaksignal.com and make use of it. And it all depends. It's very configurable and it's nice and easy, so nothing to worry about it. So let's start into the details of it. So initial investment is $1,000. It's configurable. You can make it $100, you can make it $200. It all depends upon the user choice of using it. So broker payout, currently I set it to 70% because not all the brokers pay more than 70. So 24 options pay 70%, IQ paid more than that, 85 to sometimes 86%, sometimes 68%, depends upon the place, depends upon the time of the market and the pair. So 70% is generally the notion of traders. So that's the second parameter. So win ratio 67. Let's say you have a strategy, and in that strategy, out of 3 trades you take, 2 trades you win and 1 trade you fail. So let's suppose you have a strategy where you win 1 time and you fail 2 times, then doesn't make any sense and you lose money. So most important, you need to have a strategy of at least 65 to 70% so that you can make money out of it. So we have, and we confine that to 67 in here, and 33 is loss ratio. I'm dividing it so that we can understand more better. So what is these 3 parameters I will discuss in a minute, but let's see. So month 1, so this parameter is risk percentage. So how much you wanted to risk in order to trade. So the general concept of trading, and the senior most and the most influential people, they say trade with 5% of your investment. But it is not necessary that you have to trade with 5%. It is a general recommendation so that you'll see money like that. But we recommend 3% as the initial starting point of investing into and practicing with the price signal. So 3% as the risk lot size, and so it will calculate the basing upon this. It says $30 is your first lot size in month 1. So we confine this to a number of days, number of trades you take. At the moment, so this is the cool mode. The cool mode says trade only 3 per day. That's enough for me because I'm already having another job, so I can't concentrate much time and look at the market and understanding all these things. So I only can take 3 trades in a day. So if you are that kind of person, yes, cool mode is for you. So 3 per day. So the total risk, so per day you are risking $90, and the profit, if you win completely all the 3, then your profit will be this much, $63. And the trade days in a month, so obviously not everybody is available 22 days in a day, in a month, and sometimes you see market corrections going on a different before week, and Monday is going to be like really bad. All the trades are going to, we know for sure that there's a meeting happening. Let's say there is in about a month's time there is a very major thing happening in UK, that they're going to go for a European Union membership election. So that kind of days. So we are limiting to 20 days. So you can configure it to 20 days or 21 days or 20 days, whichever you wanted to. So then it will auto calculate the full profit and the ratio of the profit and ratio of the loss. So this is the column that will help you to understand better. So here it says full profit, which means that if you win completely all the 3 cycles, all the three trades you take, and then in 20 days time you make 12,060 as your as a profit. So what it will do, it will multiply these two, that per day you make $63 into 20 days. So that gives you the profit, full profit. But what we are going to apply is like I said, win ratio is 67% and loss is 33%. So the ratio of your winning will be $844 because out of 1260 you only win 67% of times. So 2/3 of that will be that, and obviously 1/3 of it will be, I mean, in the sense how much you are losing, because you are losing 33% of the times that you put your investment. So that will auto calculate you for you that $594. So that's the ledger balance, what we call complete investment, total investment of the money that you put using the $1,000 and whatever it is, whatever your investment is. So that's the loss. So finally you take a profit of $250 per month, which by using $30 as an trade size and 3% as your risk and win ratio of 67%. So you make $250 per month. So for example, not everybody wanted to grow their account and make it $1 million or 1,000 or 100,000 and then draw it. Some just wanted to make some money, extra money using these binary options per month. So they might say, okay, $250 for me is nice. You just some extra money for my gas or for electricity bills or whatever it is. So you just wanted to draw that money out. So even if you say I want to draw the money every month, you draw the money out. So in 12 months time, so you get per year $3,000. So then you go back again to the same $1,000. Then you go back to month 2. So in the next month you do the same fashion. Then you get to $50 take home profit, and then your initial investment will again go back to $1,000. So it's one cycle. But somebody will be there who wanted to grow their account and reap more benefits from the account. So what they do is they keep going to the next month. So they reinvest that money into the business and they grow the account. So again, 3% of it, the trade size will be $37.50, and so it auto calculates for you. So out of 3% out of 1250 is 37%, so $37. So again, the same process. So it will tell you take home profit will be $312. So by the end of next month, month 2, you will be taking a profit of $312. So the most important thing to understand is that you have to keep the account in profit. Even there's a dollar or 1 cent, that's enough. That's okay. That's good. You need to keep the account in profit. So the money management is what it does. It will help you when to come out of the market, when to stay in the market, when to continue in the market, what is your lot size. For example, when I'm trading, let's say there are 3 trades. The first one is loss. So out of 3 trades, I assume 2 are going to be winner, 1 is going to be loss. Fair enough, no problem. So I started trading and I lost the first trade. So in the anxiety of recovering that money, if I start investing the second lot size of $30, which will be somewhere about maybe let's say $6 or $7, then it will not allow you to do it, because your money management says invest only 3% of the lot size, which is $30. So don't increase it. So it will limit the trader to confine himself to a lot size of 30% or 3% or whatever he or she wanted to follow. So that's $30. So I keep going it. I keep on trading and each and every month, and then finally at the end of 12 months, if you notice here, my balance will be $14,579. That's quite good money, to be frank. With the strategy of 67 win ratio and 33% loss ratio, it is quite nice to have a $14,000 account, which you grew from $1,000 and just trading 3 trades per day. So that's one of the way to go. And finally, it says what is the interest rate that your strategy helps you with. So it says in a month you grew your account by 25%, and in 1 year the interest rate, for example, if you invest $1,000 in a bank, at the end of 1 year it gives you 1% or 2%, or not even that sometimes. So here you grew your account by 1,357% or 1,358%, which is really, really nice. So that is one of the money management that we can use, is strictly single lot size and risking 3%. So if you want to change to 5%, no problem, just change it to 5%. and it will calculate you everything else. So if you use 5%, then your end of the year balance will be 24,000. And if you say the broker percentage is 75%, so your end of the year is $46,000. So now let's talk about the PBS. And what is the win ratio of PBS? Win ratio of PBS at the moment is 82%, but let's say 82%. Sorry. So the remaining loss will be 18%. And if I started using 5% of my risk, 5% of my investment, which is $50 lot size, then at the end of the year, then I will have a balance of, what do you say, 2 million? Yeah. So somewhere about that figure. But to be frank, we have win ratio of 82%, and the broker payout is not 75%. It is more than that. So sometimes IQ options pays you about 82% or 80%. So we just convert to 75%, which is average broker payout. And win ratio is 82%, but not every time. Even though we follow the rules, sometimes we end up trading with invalid setups. So let's say I say 75% of the times I trade nicely, and 25% of the times, even the ratio of price per signal is 82% win ratio, let's only put it to 75%. And risk is say 3%, because I'm not having that much of risk appetite, so I only can invest 3% of my initial balance. 3%. So at the end of the year, you will have $200,000. Believe me, it is possible if you strictly follow money management. Market is really tempting. If we lose one, we try to recover it on the same day. And it's a very strict policy that we have in price per signal strategy, when to quit the market. Those things we'll discuss in a different video, but for now we confine it to money management. So the money management of price break signal is to use single lot size. If you are following cool mode, single lot size. Even if you follow aggressive mode, it's still a single lot size, but how to achieve that goals is in a different fashion, but we won't discuss here. But the cool mode is what we are going to discuss. So that is what it is. So let's say the broker payout is 75% and win ratio of 75 and loss ratio is 25. Not every time we trade we win, so we make it 75 and 25. And with those calculations, you make $211,000, which is really impressive growth. All you're taking is $3 3 trades per day. That is more than enough, and with a risk of 3%. That is more important. So you can still configure your risk. That is not a big problem. If you say my investment is only $100, then at the end of the year, then you are making $21,000. Say no, my risk is only 1%. So at the end of the year, you're getting $7,000, which is not bad, basically. So you're getting an interest rate of 18.75 monthly and 6964.72% in a year, which is not bad. So your investment, so it will calculate for you. This template will calculate for you what is your risk and what is your trade size, how much you have to trade with, and what is your profit per day and what is your profit per month. So again and again and again, this is more important to understand. Binary options trading is a long-term goal. It is not get rich quick scheme. I keep on saying to this point each and every one that I meet. It's a long-term plan. Please make use of nice strategy, which is price per signal, and please make use of money management. You can write your own money management. This is just a recommendation for you, for all the people of PBS, and try to use it. And you can download this from my website, www.pricepersignal.com. And I wish you all a happy trading and be successful in what you're doing. Thank you. Bye.